Thank you so much for being here. So let's get rolling. So we're going to dive into how to identify and trade market tops and bottoms. So we're going to go through kind of trading tools and tactics used. So again, thank you everybody for being here on this Saturday event. So again, I like these Saturday kind of interactive trading workshops that I do pretty much weekly, and it just gives us time, with the markets closed, kick back and kind of focus on different parts of trading. So what we're going to talk about today is kind of directional trading tools and the tools that I use and some of the tactics and strategies. So we'll get into that, but a little background on myself. I've been actively on my trading journey for now 40 years. I kind of pinch myself when I think about that, but started my trading career back in the 80s on the oil side. So I was fortunate enough to get into a trading company called Coastal Corporation, which at the time was large integrated oil company out of Houston. They had refineries all over the world, and we supplied a lot of crude to these refineries. So they had actually a training program where they would train you to trade either crude products, things like that. So I was fortunate to get into that program, and sent me down to one of the refineries in Corpus, Texas, and spent about 3 months down there. Great experience because they just kind of took you through the process to say, okay, here's a crude tanker comes in the refinery, puts the refinery oil into the distillation towers, and we move products, fuel oil, gasoline, things like that. So it's a really good fundamental kind of starting point for me, and then eventually ended up in the shipping department, which was really a lot of fun, learning about chartering ships and all the different scheduling things that go on there, and then finally got into the trading group on the cargo, international cargo side, and was fortunate enough to move out to Singapore for a couple of years with Coastal, and traded products and Asian crudes out there. So it was a really fantastic experience. Now, then in kind of about the mid 80s, I went to work for a company called Transworld Oil, which at the time they were the largest oil trading company in the world. So it's Transworld, Fibro, and Mark Rich, and fantastic experience. Spent 17 years there with Transworld, and then 15 years of that was in Bermuda, which was the corporate headquarters, and then ran the international trading desk out of Bermuda for 10 years. So that's where I really cut my teeth and really learned so much, because we traded everything from futures, commodities, all the different commodities, all the different energy sectors, and then bonds and currency. So it's a great experience, and that's where I actually started trading my options, and have never looked back. So just a kind of a brief background, and so I've got a lot of things that I can share with you. So let's get started. So the following presentation today is purely for educational purposes. Any stocks, futures, or options mentioned does not constitute advice and should not be construed as a recommendation. Now, trading really is a never-ending journey of learning to expand your trading knowledge and skills. And what I've learned based on my 4-decade-long trading journey is that to become a better, more profitable trader, you really need to be able to read the charts, understand the technicals, and then manage your trading risk. Now, fundamental analysis is important and great because it can lead us to some great companies with good potential for growth. But think about it, when it's all said and done, we're going to make our money on the stock price, not the company. So when market uncertainty clouds the fundamentals of companies can quickly become worthless. So how do we then achieve trading success? So kind of what I've learned is that, when you define what makes your winning successful trades, then you create the steps involved, and then have the trading discipline to follow these steps for each and every trade over and over. That's what's going to produce some success. So it's basically, comes down to creating a systematic directional trading process. Now, step one is, planning your trades. Don't just go jumping into trades. Always have a game plan for your trades. So we're going to talk about directional tools and some of the tactics that I use here today for this plan. Now, there are kind of 11-step guideline that I can, show you or push you through. But the first step is you want to find those trading opportunities. So we want to look for the opportunities based on the big macro trends. We want to look at macro trends with, what that could be in the energy sector, it could be in the AI technicals, things like that, with the different sectors. We want to look at seasonality. We want to be aware of any seasonality trends that can, help the markets to the upside or, be a headwind against the markets. And then we want to look at industry specific. So there are a lot of different places that we can go looking for these type of trading opportunities. And then two, what I do is I scan a database of stocks and ETFs that I have, and I use the database I have. Basically, I'm looking for different patterns, and I've got 5 patterns that I've kind of identified and put together, and they're kind of what I call high winning probability chart patterns. So I'll kind of step you through and guide you through what these chart patterns are. So these are things that I define and break down, so everything becomes more systematic. And then I want to validate a stock's relative strength, and I do that based on either momentum flows or a combination of momentum flows and relative strength of that specific stock to a market sector it's in. And then I want to always be aware and evaluate the current market condition. Now, we're always going to be in some kind of uncertainty. So we want to identify the uncertainty. Are we in a low environment of uncertainty, high, or extreme? So that's going to help us then to, manage our risk of the trade if we can kind of be more quantified as far as the type of market uncertainty we're trading. And then 6, before we always put the trade on, establish what is your profit target. We're going to do that. We can do that a number of different ways, standard deviation analysis. We can do it with, Fibonacci, moving averages, things like that. And then 7, establish your trigger points or your stop loss levels. Okay, so we want our profit targets. We also want trigger points that are going to make us have to either stop a trade out or trigger points that's going to push us into trade defense. So when using options, that's a great way we can defend a trade when we hit a certain trigger point, so we can start defense measures. And then finally, place the trade, manage the trade, and then monitor the trade for a close at expiration or earlier based on the market conditions that we are currently trading. Now, the next thing is you can't trade blind. So to trade market cycles or swings, you really need some kind of trading tools that can identify a market cycle turning point. So I've always been obsessed with cycles in the markets. And so I always recommend trading a model or system where the trading rules are going to be based on a repeatable, successful trading process that's clearly defined, making it easy to implement your trades. So a really, really great trading system is one that you're going to be able to adapt and use across all major asset classes on a short-term, intermediate, or long-term basis. So that's the kind of system, a kind of dynamic system that you're looking for. Now, to trade these kind of market cycles in any market environment, I design and use a rule-based system that highlights the intrinsic rhythm of the market. So kind of, if you think about markets, they kind of go in cycles and rhythms. So they have their own rhythm to different markets. Now, the power cycle trading system and indicators that I've developed now allow you to anticipate this price activity rather than react to it, and it's based on a number of different things that I put in the system. So first, again, are the 5 winning high probability chart patterns, a directional cycle timing model that I've developed. And then I always want to be aware of, say, overbought, oversold conditions for your cycles, and then price range cycles, extensions. Sometimes we get more extreme extended to the upside or downside. We want to be able to be aware if we're getting too stretched on the market. So these are price range cycle extensions. And then very, very key is momentum flows. And then fractal analysis, which is the different time frames we use, moving averages, kind of automated trend lines, and then Fibonacci support and resistance. So these are all the things that kind of go into the kind of this system that I use. Now, what this does is then it provides you a set of guidelines, which then allow the trades to come to you. So whatever model you use, know the guidelines and the rules and stick to those rules. So you want to try to make things as systematic as possible to take your emotions out. Now, the end result of using then a trading system is that you're going to make your entry and exit decisions based on the trading model that you're using, not your emotions of fear or greed or that are going to constantly sabotage your trading results. So it's always a problem mentally, psychologically with traders to a lot of times we're going to either over trade, that's kind of chasing trades, things like that. So you want to settle down, you want to pull your emotions out of your trading, and that's why you need some kind of systematic approach to help you calm your emotions. Now, step two is the cycle model, the directional cycle timing model. So really when, again, trading successful trades, if you dissect and look at the trades that your past trades that have been winning trades or even your losing trades, you're going to see a common, denominator. They're going to always be based on you've got a good direction and your timing was good, and then your management. So it's really direction and timing is such a key component of all your successful trades. So let's take a look at some cycle timing tools. Now, the first thing is momentum is so key. And so when we're trading any market environment, it really all comes down again to price direction and timing, and then your risk management. And the best trading tools for signaling price direction and market timing are based on momentum flows. Now, momentum flow indicators, what they do, they'll measure price strength or price weakness, and when measured across multiple time frames, this really creates kind of a dynamic trend following indicator that you can use. So it's going to help you to do a number of things. The momentum will help you to identify new cycle trends early. It'll help validate your specific trend strength or weakness based on the momentum, and then will help keep you in the trend and maximize your profit. So if you've got a good trade setup that has multiple time frames of good solid momentum, let's say to the upside, it's going to make you more confident that that trade is going to hold that momentum and cycle and trend, and so it's going to make you probably stick with the trade and maximize your profits better. Now, step three is that timing edge. So we have directions key, and then you really need a good edge and good entry timing and timing on your exits. So by incorporating the multiple time frames, which we refer to as fractal analysis, this is going to help to provide clarity to an overall trend and can be used to, for your swing trades, day trades, or even longer term kind of macro trades. So what you're looking at is a long-term time frame. This allows you to see that big picture. So in order to get the idea of the general trend that may exist, and then we're going to use the shorter, lower time frames are going to be used to plot the actual trade entry into that general trend. So what we're looking to is to do a kind of a line, have the lower time frames aligned with the general trend to show either trend strength or weakness. Now you're never going to get the whole picture of trend by just using one time frame. So kind of a good analogy is that let's say you're kind of a macro top-down view is, let's say you're in an airplane flying at 35,000 feet. You can see a lot of different terrain below, right? And then if you want to really zoom in for more detail, we're going to lower that altitude. So that's what we can do with the different technical analysis. We start out with the big macro, and then we lower it down to really look at the fine details. So this will help us, put together a specific timing edge of, trigger points for breakouts and reversals. So step four then is the kind of high winning probability chart patterns. And so these are really key. Over the years and years I've traded, kind of put together these patterns that I've identified, and then I see the specific pattern, then I can, put a different option trade to it or different trade setup that I want to use. So let's go through a few of these and I'll kind of show you the general, what they look like. So the patterns basically I'm looking at there are basically 5 patterns. Now the big one that I really love to see is what we call the volatility compression squeeze. So this is a kind of a breakout pattern, a consolidation pattern where the market's just consolidating, churning sideways. So it's going to churn, go sideways, and then eventually it's going to break out either up or down. So it'll never go sideways forever, right? So what typically happens when you have a big, let's say a big move up, the markets are not going to go straight up or down. So when you get a big move up, at some point the markets will pull back and consolidate that move, kind of regain the energy. It expended a lot of energy on that spike, maybe up. So then it pulls back and regenerates, and then sometimes it takes a long time to regain it, and then it'll continue either up or it'll break down. So a lot of times you'll see markets kind of go in a stair step. They go up, then they consolidate sideways, take the next step up, consolidate, take the next step up, or they can do the same thing to the downside. Now within this volatility squeeze pattern, what the other 4 major patterns that I'll look at are what I call the cycle high reversal. So we'll go through what that is. That's basically when the markets have moved way above all the different key moving averages, and then they start to get exhausted and they start to sell off. That's a cycle high reversal. And then we have the opposite of that, which is the cycle low reversal. So when the markets have been hard to the downside, eventually you get selling exhaustion and they start to cycle back up. So bear to bull reversal or bull to bear reversal. And then we have the cycle low retracement reversal. So this is where the markets maybe will retrace an up move into a key moving average support and then hold that support and then cycle back up. Or cycle high retracement reversal where the markets are moving up into a key major resistance point of a moving average and fail and move back down. So these are patterns that we can specifically identify, and then it helps us, to put together the trade that we want to use. Okay, so the first one is the volatility squeeze kind of compression breakout. So what this squeeze pattern is, it's identified as a period again of that price consolidation, where price is just coiling in a really tight pattern, and then has an explosive momentum breakout either to the upside or downside. Now, when you have a security that has multiple time frames in a volatility squeeze, so let's say I like to look at, like a swing trade daily, 4 hour, 1 hour, 30-minute on down. So those are multiple time frames. So when we're looking at multiple time frames in a volatility squeeze, then these breakouts can be even more powerful with greater follow through, kind of like a chain reaction explosion kind of. So I call it kind of lightning in a bottle. So, you might have you could have a 5-minute time frame that triggers, that could trigger then a 30-minute, the 30-minute triggers the hourly triggers a daily could end up triggering a weekly. So you could have kind of a tsunami effect. Now it's kind of like a chain reaction. So set off by those lower time frames that ignite the next time frame up, and it becomes sometimes super powerful movements. So it's a really great, fantastic setup for swing trades or even day trades, offering that big timing edge. So that's a really great way to get a good timing edge, and time equals risk. So the quicker we're in and out of the trade, we're going to reduce our risk because we're spending less time in the trade, so things don't come about and happen to us. So here's kind of the pattern, what it looks like when you break it down. It's just kind of that consolidation here. This was just an Apple 5-minute chart, but you can see Apple here kind of in the sideways pattern, just, coiling up, going up and down right there, right? So at some point, this is going to break out either to the upside or downside. Now with my trading indicators, I've coded in, these are what I call extreme range bands. So I've coded in these dots that show, based on the code that's in the model, of when this volatility compression starts. And then these are color coded for momentum. So in here, so magenta means momentum would be negative, and yellow is momentum's positive. So the next thing that I look for then is, okay, what's the momentum? So the momentum then will give us a kind of an indication or a potential forecast of where this breakout could be. So let's say we have a really tight range like this. What I'm looking for is to trigger when it breaks these kind of the highs or the lows of this coiling pattern. All right, and so then I can get a potential momentum based on momentum indicators, which I'll show you. If they're starting to push up, the probability is higher that it's going to break to the upside, to the downside. Now, if the momentum indicators are going down, the probability is higher that it's going to break to the downside. So it's a really great tool for getting set up in these types of trades, and it gives you time to get set up and watch the trade and get ready for the breakout. So so this is the one pattern that I look for in all the other 4 patterns. So here's a really good example. This is Netflix, and you can see just on this one chart, this is a daily chart, you can see the green dots right here. You can see the purple, magenta, and the green dots above. So look how it's coiling sideways right here. So really tight. Now these are the momentum indicators I use in a design. So it's what we call Power Cycle Lower Study 1 and Power Cycle Lower Study 2. Now Study 1, Momentum Cycle 1, is really fast. It's a fast momentum measurement. And 2 is a slower momentum measurement that confirms Cycle 1. All right, so when I have them both aligned together, that's showing me there's a good probability that the momentum is going to break and push to the upside. Now, so the first thing I do, we have what we call the cycle reversal indicator. So you can see right here, this is an alert, kind of an advanced alert that the markets are getting ready to maybe start a cycle reversal either up or down. So this is kind of what step one, and then step two, so I look for cycle one to either go positive, negative, two to confirm that momentum, and then here, when you get the, you're breaking through your trigger point, you take the trade. So that's an example there. Now you can see it pushes up here. All right, then look what happens, momentum. Momentum stalls, comes back off. What does the market do? It starts to churn again and then eventually comes back down. All right, so then we go through another squeeze. This one had just constant squeezes. And then we had another squeeze here on Netflix. You can see again, the dots starting to form right here. Okay, and then momentum, what does it do? We had first the cycle reversal right here, that purple arrow. Momentum starts shifting up, boom, again, a break to the upside. Then we had a cycle reversal down, that arrow there, right there. And then what happened with momentum? It starts to fail. What does the market do? It pulls back, a mean reversion to the moving average. Then we had another momentum squeeze right here. Momentum cycling back to the upside. So that's kind of the pattern that, I love to see and look for. And, I've got a scanning tool that will help to identify these patterns. So you don't have to look at, charts all the time. Now, here are some other examples. Now, this was one but these are trade setups that we took off these different, this different pattern. But here's one was Google. And here it was with the 4-hour and the daily squeeze. So you can see Google right here, was really tight consolidation right here on the 4-hour time frame. And so you can see this is what I call the alignment of your momentum. So here's the 4-hour going up, and then here's the daily in a squeeze, a really tight squeeze, and here's your daily momentum. So here's the cycle reversal, then cycle one goes positive, two goes positive. Here was your trigger right there. Boom. Beautiful push to the upside. If you can't hear everybody else here, if you can't hear, go out, come back in. So go out, come back in here. Let me put that to you. Yeah, audio is okay. Hey there. Yeah, okay. If you can't hear, go back out and come back in. So that's a really good example there. Let's go through a few more. I just kind of want to make sure you can kind of see what the pattern is I'm talking about. Now here's a really clear, really defined one on Exxon. So you can see here Exxon, really a long squeeze. It started right back here. See these dots starting to show up. Now look how tight the pattern, that price pattern was. So it's just coiling there, and then finally, this is a 200-day moving average. So finally, it's chipping away, and then finally, look, see momentum. So it's giving you the probability that there's some higher probability that this is going to break to the upside than trigger to the downside. So that was a really nice volatility squeeze trigger to the upside on ExxonMobil. And here are a couple others. If I can get rid of this drawing tool. Here's a really nice one. This was on Oracle. You can see another, again, very tight consolidation. So you don't want to have it really what I call loose. You want to have this pattern where the prices are really tight, not really going, swinging wide and loose. So this creates more momentum when it does break. So here it is. It starts here. You can see the dots right through there, and then you have this really tight pattern, and then momentum is showing us, here we have the cycle reversal right there, and then we've got momentum shifting up. So the probability on this one was that it was going to break to the upside, which it did. So that was one on Oracle. Here's another one. Here's on Square. So these are just constantly all over the place. Here was another really tight pattern. This was on Square. You can see right here the dots show up. That's showing the code in the system, showing that it's in the squeeze based on what's coded in. And then you can see the patterns tight through here. and then momentum starts to shift. We have cycle reversal here, and cycle 1 goes positive 2. So you take your shot, like you take your shot. So if you never take a shot, you're never going to score a goal, right? So this gives you a high probability shot, and then see what happens, after you take that trigger entry. So here's a couple others. Now this is cycle high reversal. So this is kind of where we are now. The markets have been really cycling up, very, very strong uptrend. And you can see here, these are what we call extreme range bands. Okay, so this is based on average true range, but these are what I call my extreme range bands. So what this does, this is when we get in a really strong market, I like to look at the weekly long-term time frame. And so you can see this was QQQ trending up, and you can see it would trend. Typically what you do is you trend into like this is the 2 ATR here, that blue line, and then 3 is more the extreme part of that. So typically a market will move from its moving average to that first extreme range band. And then when it gets really strong, it goes up here to the 3rd ATR. And then once I start getting these signals right here, those arrows, those are cycle reversals, then it's showing me the potential. There's potential buying exhaustion. Okay, you're getting, buyers are getting exhausted. And then at some point, you'll run out of buyers and you get a pullback, into your, reversion to the mean, into certain key moving averages. Then you maybe have a consolidation period like you did here. The markets work off the overbought, and then they move back up. So they cycle, right? So that's a really good, look there at QQQ, cycle high reversal. Let me pull up, let's see what it looks like really quick here. I'm just going to pull up my extreme range bands here on a daily to show you real quick. So this is just a kind of current example. You can see here is QQQ currently, and you can see it's been in this fantastic uptrend, right? So it's broken above that range band there, and now you're in the extreme range band there. Now we started getting some cycle reversals. So see what basically happens. You can just see it getting exhausted, right? So the market then just starts kind of going sideways. It doesn't really make any really new big gains. So here's cycle reversal, then here, okay, so right there and here, and then it has a pullback. So last week we finally got that pullback. So it's a really great tool when we get in these markets that get extreme to the upside or downside. So you can just see in this example, this one chart here it is extreme to the downside right there. See how oversold it was getting here? And then what happened? We had a cycle reversal right there, and then boom to the upside. So we're playing these cycles, the rhythm of the market. So a really great tool to help navigate that kind of market situation. Here's another one, cycle high reversal on the daily QQQ right there. Momentum shifts down, down she goes. Now here's a cycle high retracement reversal. Here's when it retraces into key maybe overhead resistance based on key moving averages, or it could be typically moving averages, or that's what I typically look for. So here's an example of SPY, cycle high retracement reversal. So you can see it going into this key moving average. That blue is a 200-day moving average. So it gets up here to that blue, and that's a really huge moving average. So the first time up, it's like 99% of the time, it's not going to get through there. It needs to really chip away at it like a tree trunk. So it gets up here, and what does it do? Reverses down. Look at the momentum. So it gets up here. Look what happens to momentum. It starts to really pull back and wane, and then finally goes negative. But the first thing was a cycle reversal. And so this is such a great tool indicator. So you can see that cycle reversal here with momentum starting to pull back, and then down she goes. So that's a kind of a look at a cycle high retracement reversal. And then here's just one more example. Here's XLK, the technology ETF. And again, you can see it going up into the 200-day. So typically, when I use the cycle reversal indicator, when I start seeing 3 combined together like this kind of a sequence here. So you can see the first one was right there. So I'll just kind of watch it when I see the first one pop up, because a lot of times they'll do what it's doing here, just kind of goes back and forth. Then the second one, I start getting a little bit more focused. And then when I see the third one, when I see three kind of sequenced together, that's usually when it's ready to kind of exhaust. And so you can see it really pulled back then. So that's a really great example there. Yeah, the day trade too, these work really good with day trade. I like to use, I don't spend a lot of time day trading. That's just another thing, but we used to do a lot of day trading, but this works really good on like a 5-minute time frame, 2-minute, 5-minute time frame works really well. Now, before we get going, I know everybody's at springtime, so you might be popping out, taking off early, but I want to make sure that you have an opportunity to join us next week. I'm going to be doing a full course that'll be next Saturday, the 8th of June, from starting 11 a.m. Eastern to 2, and then we'll follow up Monday from 4 to 5, or however long it takes. But this is going to be a directional trading course that I'll be doing. And let me give you the link here if you want to, get a jump in and register and get a, discount off this course package. Then here, use this current link. This is powercycletrading.com/special. Let me give it to you real quick. And if you use this link here, just click on it. Click on that link and it will pull up the special page that you're going to be able then to come down here. Okay, so it'll pull up this page for the course that'll be starting next week, and it'll be live and recorded. But if you want to take advantage of the promotional code and get 15% off, then what you're going to do is go down here and put in DIR 15 right here. It says DIR 15. That'll give you another 15% off. So let me put that code in for you. So just, and it's small cap. Just put in, once you get in here, when you get to the payment links, I'll show you, there are 4 different packages that I've got for this particular course. So use that DIR 15. So scroll down here, and this will be available. You can take advantage of this today for another few hours. So go down, here are the different course packages. Course package 1, this will be, we'll go through this in more detail towards the end here, but just wanted to get this out to you in case you do have to leave early. So with this course package 1, you're going to get a selection. You'll get 1 indicator. So I've got all my trading indicators, and you'll get a choice of 1 with this package. So you'll see my multi-time frame indicator, volatility squeeze scanner, my cycle reversal indicator, extreme range band, opening range indicator, momentum flow. So you're going to get a choice of any of these, and you don't have to decide now. You can take whenever you want to. Now the only indicator that's not included is my total core model, my power cycle trading model indicator, which I'll show you next. But you have 1 choice of any of those, so take your time. Now, if you go to the website, you'll see these are anywhere from $297 to $197 for these indicators. So access to the 4-hour plus course. So it's going to be $197. Now, if you use that DIR 15, you're going to get this will be $167. Okay, so you'll get 15% off that, and you'll get all of these additional bonuses. So this is the course price, but there'll be $167, and then you can choose an indicator that you want. And then along with that, you'll also get my price target mapping course. That's really important for putting together your profit targets, your defense targets. So this course that I'll be teaching next weekend, is going to combine all of these different tools, the indicators, Fibonacci, things like that. Then you're going to get my other really cool indicator. It's called the moving average cross indicator. So you'll get that. Then you'll get 30-day trial membership to my trading club. You can start that whenever you want. Hopefully you'll stay on. It's $97 a month, or we have other packages. And then we'll do a follow-up Q&A. This will be probably the very next day. And then you're going to get my All About Futures 31-page futures guide. You'll get that. So that's all the different bonuses that will come included. And so that's 197, but you use DIR 15 and you'll get that at a price of 15% off. So just go click on buy and then come down here. You'll see everything listed and come here where it says promo code and put on DIR small cap 15, hit apply, and you'll get the 167. So here are the other, I'll kind of go through here quickly, but here are the other packages that are offered. So here's course package 2. Now this course package then gives you all my trading indicators. So with this package, you get everything, okay? So you go through here, there's a lot of great tools that you're gonna get. You'll get everything I have. So you get the course, but you also put in DIR 15 and you're gonna get a discount off of this. But then you'll get my dynamic trading model. So these are the prices on my website, $597. You'll get my volatility scanner. This is scans for that pattern that, the volatility compression squeeze that I showed you. You'll get that. My multi-time frame alert indicator, I'll show you what that is. My signal trigger indicator, reversal indicator, extreme range bands that I showed you, high-low breakout indicator. So you get all my trading tool indicators. You'll get the Fibonacci course. You'll get the moving average cross. You'll get the trading membership 30 days. Start that whenever you want. Follow-up Q&A, etc. So all of those tools, and that comes out to over 4,500. Now, those will be then for a price of $397 for everything, but use that 15% off right now. Click on that, and there's also to pay if you want. Come down here, put DIR 15, and that'll drop that price down to $337. And there's a to pay if you like to have that. And then the other packages what they are is just a combination. They're just offering you my open and close trading alert services. So just kind of go through these quickly and then we'll move on. But here, this is my alert service. So I've got 5 different trading alerts that I send out, and you'll have access to all 5 of the alert services for the next 4 months, plus the Power Cycle Trading Club for the next 4 months. So basically what this is giving you all of the alerts plus all the indicators, like I showed you, package 1 or 2. So you can see, I started my first alert service part was back in 2018, and through yesterday, we've had 79% winning rate. So keeping a high winning percentage of trades based on these trading tools that I use for all these trades. But with the alert service, you get all 5 of the alert services, and then you get with the course package, this would be package 3. This would be all 8 indicators. So you have that choice, and there's a to pay, or you can do course package 4, which gives you that choice of 1 indicator and all the bonuses and the alerts for 5, all 5 alerts for 4 months plus the trading club. Okay, so we've got send out breakout reversal type trade setups. These are typically credit spreads, calendar counter diagonal trade setups. We did a couple of those this week. Butterfly long condors, selective earnings, and pinning trades. So we'll go through more of a review here a little bit later, but that's everything. So if you want course package 3, this would be your choice of 1 indicator, all the bonuses, and these alerts. Then it's $597. Click on that, and then put in for your discount, put DIR 15. Hit apply. There's also to pay, drops it down to $507. You could do to pay if you want to. And then if you want course package 4, this is all the indicators and the alert service at $797. And again, you'll get 15% off today if you put in that DIR 15. Now we can talk a little bit more about this, a little bit later, but that's everything. And I just want to make sure that you had that option available to you in case you do have to leave early today. So just again, use that not promo code, but just use this link here, powercycletrading.com/special, and that'll give you access to this discount. All right, so any questions on that, let me know, but let's kind of move on. So now here's a cycle low reversal. So here's where we're coming in. We've been having a huge, just really massive sell-off. This was such a massive one right here. You can see this just hard to the downside on the S&P, just hugging these outside bands of my extreme range bands. And then you're going to see here, you can see that cycle reversal there, and it just keeps going down. Cycle reversal there keeps going down. So that's where this momentum really comes in, really saves your, because you can get stuck in a trade. You can start thinking bottom fishing, and you get in, you get run over. But this is where these momentum indicators are just so dynamic, because you can see here, we had that cycle reversal, got crushed. Cycle reversal, and then here's the third one. Okay, right there. But then what confirms that this thing is starting to go bear to bull is my momentum. So here's cycle one, fast, right there, that green arrow. And then two, cycle two is right there. So this starts to confirm that momentum is starting to stick. All right. And then we get the reversal. All right. So just a fantastic indicator with the momentum and everything added to it. Here's another good example. This was on Tesla, cycle low. So this is where we're coming in, sold off hard below all the key major moving averages. And then you can see what happens. We get the cycle reversal. Here's the first one right there, but look what happens. All the momentum is still negative, right? And it rolls over. And then the second cycle reversal here. Now this is an alert, not the signal. And then I start getting momentum go positive, momentum positive here. So here was the kind of confirmation right there, right here. And then up she goes. And then here's another thing I look at. This is the moving average cross indicator. You're going to get that as a bonus too. Look at that, perfect. All right, so that was a really good one on Tesla. So these are some of the best trades you can find, these bear to bull reversals. And these tools will help you really get that, timing edge into the trade. Here's another really good one example. This was on IBM. So these, are just across, it could be anything. So you can see IBM sold off not as extreme hard, but just kind of trending down. And then look at here, you get cycle reversal, cycle reversal. But look, see, momentum is still negative. See, cycle two, this is such a key confirmation to stay out. So here you get that cycle reversal. What does the market do? Goes sideways, comes down. But look at cycle two, still negative the whole time. All right, so finally, we get this reversal here. Finally get cycle one. So this is really starting to get, okay, let's get alert. And then two confirms here, and then up she goes. Here's that moving average cross. You'll get this indicator with that package. Up she goes. So these tools will really help your trading as far as you navigating all of the different choppy market environments that you're going to be trading. Now here's a cycle low retracement reversal. So this is where we get a cycle into a big key support moving average and bounce back and reverse off of it. So here was QQQ on a weekly long term. So you can see it coming down, and you can see how it comes down here again. Again, here's a cycle reversal. Now look what happens. See momentum two, negative the whole time, right? So you just have to be watching that. Okay, then finally we get that cycle reversal. We get positive momentum, and then we get confirmation here. And look at this 513. That's your moving average, and then it comes back down. Up she goes. So here it comes in. That's a 200-week moving average right there, that big blue line. So that's a retracement reversal off of that right there. Here's Walmart, just another really good example. So there's just so many that I could show you, but here's Walmart sold off hard. That's into the 200-day moving average, right? And then we had a cycle reversal, positive momentum confirmation, moving average cross, up she goes. Here's another one right here. Look at that moving average cross, up she goes. So these are just some I wanted to point out. So with the indicators, with the reversal indicator, I have those color-coded magenta, that purple. Okay, so if you join us for the course, I'll show you how to set up all these tools. So you're going to get all these tools, right? So in the course, I'll show you how to set these up so you'll get the arrows that pop up. Now, so I have these color coded. So I know when I see that purple, that's my cycle reversal. When I see cycle 1, I've got that color coded into green. When I get cycle 2, I have that color coded in yellow, and then this moving average cross, I have color coded orange. So I have those color coded, and so you can see the arrows on the downside. So there's cycle 1, here's cycle 2. So those are they're color coded. Here's the volatility squeeze right there, the dots. Okay, so I'll show you in the course. This is part of the course. We'll set up all these tools and show you how to use them, set them up, and then how to use them and the rules behind it. So these are really set specific rules that are used. So here's just another one I want to throw. This is a market bottom cycle low reversal. This is just the S&P 500. If you were around in 2008, 2009, you could probably felt the pain, right? And so you can see this is a monthly macro chart here. So you can see that the market just cratered after 2008, was down for a year and a half. And then finally, we had a cycle reversal right here. That was March of 2009. And then we start getting momentum shifting, and then, back up she goes. So just kind of wanted to show you that these indicators will work on any time frame, day trading, macro, long-term, whatever. So let's take a look. Also want to kind of quick, I always want to know, okay, what is seasonality? Is there any big seasonality effect going on? Sometimes there are big seasonal trends, and other times they're not as strong. So currently, this is kind of where we are at present. We are looking at the S&P 500. This is my seasonality continuation charts. And so this is the S&P 500 September timeframe. So these go back 5 years, 15, 27 years. So we're currently right about here. So we're having a little bit of a cycle low seasonally, not anything huge. You can see it's really, this time of year is kind of choppy. But right now we do have a little bit of a seasonal low pattern that will extend into next week, okay? So these can really help you as far as your timing the market. So when I see a good strong seasonal trend up or down, it'll help you with your trading plan, right? So right now, we'll talk about it, but we had that huge kind of short covering rally or big rally up on Friday. And so the thing that we could think about looking forward to next week is the big number next week will be Friday, the non-farm payroll. But until then, the market, I think, will probably cycle back up based on, you've got the seasonality behind it, and we'll look at the chart in a minute, but based on also the Friday activity, what happened. So that's a look there at the S&P, and then you see the NASDAQ is pretty much the same. Now the bigger trend then comes at the end of June, okay? You can see here the bigger cycles, seasonality cycle trends come towards the end of June, especially on the NASDAQ. There's a good potential seasonal trend there. And crude oil is pretty choppy. You can see it's just kind of sideways. No really, specific seasonal trend to trade off of that's really strong. So you can see the bigger seasonal trend here for energy, you can see was the end of March into April. So that's a really strong trend back in here. Okay, so these are things I'm always looking at. So let's take a look here real quick here. Somebody was asking about the Friday. So one thing to look at is, I always like to look at the S&P 500 or SPX or SPY as kind of your reference to the markets in general. So one thing that you're going to notice is that we came down to a very key moving average. That's this is also with the trading model. If you join up for the class and get the indicators, this is a 50 simple moving average right here. So this is coded into the model, and it's color coded. All right. So when the 50 simple moving average is up, sloped up, it's going to be green. When it's down, it's going to be red. If I go back here to show you, it's been a while since it's been red. Okay, here's the 50 simple moving average here. You can see it's sloped down, so it's color coded red. So these are all the little, highlights and visual things that I've got into the model, which you'll get all this. And then I've got what we call the support resistance package part in the model. So you can see that dashed yellow line is the prior, this is on a daily, so this is the prior week's close, is that dashed yellow. And then let's see where the prior week's high was right here. And then the prior week's low is right here. You can barely see it, but that's your dashed red. So this is a really key close, because you can see here, if I put this on, well, that's a really strong candle pattern. But if I just put this on a daily bar, you'll see it more clearly. Okay, look what happened. This was just the perfect technical bounce. All right, so the market's going to be giddy about this. So it came down, and you had the S&P close the prior day below the 21 exponential. Then Friday sold off, opened up right there on that 21, sold off hard into and stopped right on that 50 simple moving average. That's also the 382 retracement. So it's a perfect technical place for the market to stop. And all the little machines and all that stuff, they look at this. They're looking at the same thing. So they're looking at that 50. That's a key, big, huge key moving average. The 50, then the 200 are key, okay? So it came down here, bounced right off of it, couldn't get any more momentum to the downside, and then had that short covering rally all the way into the close. So here's, we look at this, you can see it on this, let's say the 5-minute time frame. Look at that. So these are, so here's the pack, when you buy these indicators, this support resistance package. So you can see here, this is a 5-minute time frame. So if you're a day trader, these are great tools. So this dash green, that's the prior day's high. Okay, so this would be Thursday's high right there. So you can see here support resistance. Here's Thursday's close. Here's Thursday low. So what happened? We came in, the market opened up, came down, broke the low of Thursday. Looked like, oh, everything was just starting to fall apart, going to hell. And then where did it come? Came down to the 382 retracement, which was also right there, basically the 50 simple. Now look at the momentum, since we're looking at these time frames. So here's just a 5-minute. Here are my momentum indicators. So here's the cycle reversal here. So here's momentum, got hit really hard right there. See it just really cratered right there, right? Now what happens, now look, so here if you're timing the market, let me just back up here. I'll show you how these tools can really help you. If you're intraday trading, or if you're just looking for that market when it's going to start cycling back up. So here it came in. So this is Friday. So see how hard it sold off. Now what happens? The momentum first, see there? Okay. Now here, see you had the cycle reversal, but look, so momentum 2 is negative. So you don't want to go get sucked into that. Now you're getting another cycle reversal. Okay, now I'm watching momentum. Okay, now, okay, here, cycle 1 goes positive. See the green arrow pop up? So this might be a cycle reversal from this extreme sell-off. Now look at the momentum on 2. The histogram starting to turn back up. Still waffling sideways. 2 is getting close to going positive. Here it goes positive, boom. And here's the moving average cross that I talked about. You'll get that tool. Then look what happens. So if you've been watching this as a day trader, you come into this key support area. All the machines were watching this. 382 retracement, 50 simple. Then you get momentum. Look at that start to shift. And then look what happened. Look at it tracking, holding the moving averages. Look at that. Building, building, building. Just look at that. Just blow off to the upside. All right. So those are all the tools that you'll get. These things will really help you to, navigate any market, anything you're trading. If I can get this to move over. All right. So that's a really great example. Now, if we look and go kind of what I call top down, I'll put this back to candle. So we had a good bounce. Now, if we look at just going from macro, which I call monthly, we're in a big uptrend, right? Okay, so look at the momentum. Cycle 1, 2 are positive. Now we're getting, overbought, but we can stay overbought for a considerable period of time. But here's kind of what you can then kind of plan for. So here, the last time we got this overbought, it took, here's cycle reversal, 1, 2, 3, 4, 5 months to finally exhaust. Okay, so we haven't even gotten the first cycle reversal. So this trend can stay intact for much longer. All right, so here it took 5 months to finally correct. That was back September of 2001. September, October, November, December, January, finally then correct. So that's what potentially you can look at. So this thing can stay up here. It doesn't mean it's going to go straight up, but it just can consolidate. All right. So the macro trend is still up. Then I like to break it down to the next time frame, which is the long term, which is the weekly. Now the weekly, we're losing a little momentum. So you can see the market has kind of stalled out a little bit up here. So we have a little bit of buying exhaustion, but cycle 2 is still positive. So the trend is still up, but it's lost some momentum. And then we look at the daily, which is what I call the swing trading time frame. And this is the one that we want to play for swing trades. So you can see we had that sell off, but if you've been paying attention to the technicals, you would have known, okay, the 50, if it's going to stop, it's going to stop at that 50. That's going to be the first big support. You probably get the bounce. Then what happens technically, if it's going to come back down to retest that 50 again, maybe 1 or 2 more times, and then breaks. So first time down rarely ever breaks the 50 or the 200. So that's kind of what we're looking at. That's kind of what I'm looking for. And then, there's so many other little things to add, but that's kind of the general overview. So be looking for maybe a little bit more follow through next week into that non-farm payroll number based off that really good close. Now, step 5 is the scanning process. So this is really helpful, this tool, for spotting the breakout and reversals before the herd. So we want to be able to put together, what I like to do is put together a watch list. So if you come in our trading room, open during the day, every morning, we're constantly updating, putting together a watch list of trades, for breakouts and things like that. So this helps to identify potential trades. And so one thing I like to do is look at, sector rotation to see, what areas are really the hot areas. So this is the S&P 500, and then it shows you all the different sectors, and then we can see what's rotating from, 1 day, 5 day, monthly, 3 days, 6 months, up to a year. So this is a really cool, really good tool. Here it is right here. It's a free tool. Let me show you currently. For anybody that's interested, just use this tool here. It's called sectortracker.com. Let me put it in for you. Constantly using this tool every day, all day long. Okay, so what this does, then you can see what's going on a 1 day, 5 day, whatever time frame you want to look at. So then what I do is drill down inside of these sectors, and then I'll look for the chart patterns and the squeeze within the sector. So here's 5 days, you see what's going on. Here's 1 month, if you look at that rotation. So if I want to see what's moving, then I can say, hey, look at energy, really had a big move. Well, let's see what's moving. I click on that, and I can see here's index weight, ExxonMobil, looks pretty good, up 2.93%. So then I can start building my list of things to be watching for either cycle low reversals, breakouts, volatility squeeze, things like that. I'll show you then how we go about putting those together. 1 second here. So this is just a great tool for then drilling down, okay? So can spend a lot of detailed time on that. And then I put, I have all these different stocks or ETFs in my database, my watch list, and then I can scan for volatility squeeze. So and this will be a tool you'll get with the course if you buy the package. So here's a volatility squeeze on the daily. Now this is TTD, means that daily squeeze is triggered. Here's the squeeze on the 4 hour. Here's a squeeze on the 2 hour. So the combination I love is the 4 hour and a daily squeeze. And we can also look at weekly squeezes. And so then this will put together this list of everything in a squeeze in the database that I've got everything listed. And so then you'll see it has a number. So for example, here, what this is telling me, a quick review, is that if I was looking here at CF Industries, it's in a daily squeeze and it shows 23. That means it's 23 bars. So 1 bar is a day. So this CF has been in a squeeze for 23 days. And then here's MetLife, here's Walgreens, here's Mosaic, it's been a squeeze for 9 days. Here's XLI, Industrials, and then I've got it color coded based on cycle 1. So when my momentum indicator's up, that'll be green. When the momentum indicator's down, it'll be red. So it gives me a lot of good information that I can quickly review fast and kind of look and then dive down into a specific. So that's the watch list there, and then I can go into S&P 100s, Nasdaq 100. So here's just a kind of the S&P 100 stocks, and I can kind of see what's in there, and then I can click on it and drill down. So we'll come back here in just a minute. We'll go through a few and see what's setting up. Now step 6 then is the breakout reversal trading alerts. So these alerts that I send out are all based on these tools that I've shown you. That my scanner, looking for these chart patterns, and then the indicators to help me give direction to a trade and timing to the trade. So with the Elite Open and Close Trade Alert Service, just to kind of a quick review on that, so you can see how this is done, and so it's really had a great performance. Now these are unaudited, but these are just the winning, losing trades, okay? So I started my first alert service. There are 5 alerts that I send out. Okay, 5. So it could be a credit spread, it could be a debit spread, it could be a calendar diagonal, it could be a butterfly along condor, things like that. So these are all what you'll get. So the first one started in 2018, and through yesterday, I've had 735 trades closed out, 531 winners, 47 break even, 157 losing trades. So the winning percentage we've been holding over 70-75% over this period of time. So I'm always looking for these really high winning types of trades based on those chart patterns. And the course is going to cover everything that I do or use to select and put these trades on. Now here's one that was just an amazing trade. I wanted everybody to see this one. This is the alert service where these are called what we call the binary pinning trades. And so this one was one that was sent out. We had this one in February, and this was on Tesla. And so this was also a cycle low reversal. And then this was the alert sent out for all the members. So this was a low risk, super low risk trade. So this is what we call the lotto trade. So Tesla was trading here at 189.35, and that was on the 8th, okay? So what we're looking at, I was looking at this cycle reversal, and then based on some other things I look at for, potential pins, this highlighted the potential for Tesla maybe to have a move towards 200. So send out this super low risk trade. So it's binary, meaning that if you do the trade, it's going to be either a winner or a loser. So, but if it's a loser, I want to keep the losers really small. So the loser, this was going to be at 12 cents or $12. So this was a butterfly setup targeting 200. So it's a 197.5, 200, 202.5 butterfly for the cost of 12 cents or $12. So if if it didn't work out, your risk is 12 bucks. If it does work out, the potential here was for a return of almost 2,000%. So it sounds crazy, but these are realistic and also possible trades that you can make these kind of returns on. So then you can see on the 16th, you can see here, it was trading right here at 200. It was amazing. So now this was up $215 per spread, up 1,791% return. And here it was going in towards the end of the day. It was up, still trading at 200, and now it was up 1,916%. Okay, so this is a kind of, again, one of the trade type setups that you might receive. And so here was a cycle low reversal. Okay, cycle reversal here, momentum starting to shift up. And this was a targeted area here, that 50% retracement at the 200 strike, and some other things that I look at. So here was the trade, sent this out, and this turned out to be a huge one. So this was the butterfly 197.5, 200, 202.5, $12. Okay, 12-cent debit cost. That's the max you're at risk. Potential profit spread width of 250 less 12, $238 per spread, 1,983% return if you hit that 200, which it did hit that 200. So it was amazing. Right into the close, it pinned right at 200, right there, it pinned at 200, right there. So, if you put this on, you're going to make somewhere around this, not to the penny, but very, very close. So it did pin right there. So this went from $12 to $250, $238 per spread, over 1,900% return on that. And here are a couple others. This was a really nice one, and I think Exxon's starting to look good again. I want to go back to Exxon here in a minute and show you. Okay, so here's Exxon. Here was another really nice trade setup. This was another alert trade. So this was back on the March the 5th, and then Exxon was trading at 105.80. Now, just to show you the chart pattern. So here was what identified, and this was also a volatility squeeze. So this came up on my scanner, okay, right there. See the squeeze, see how tight that is? And then momentum starts to shift. Cycle 1 starts going up, and then 2 is going up, and then here's the 200-day moving average. So that was our trigger. So when it started breaking that 200-day, that was the trigger entry. So that was on the 5th. It's trading at 105.80. And so this was a counter diagonal spread sent out, had a couple adjustments. I'll just kind of go through this pretty fast, but we did an adjustment on the 12th. It was trading at 108.65. So we're adjusting this up so we can play the trend further to the upside. And then the next day we took a little profit on the 13th. Now it was trading at 109.95. So we got in right there. And then we did another adjustment on the 14th. It was trading at 110.41. So did another for trend up. And then we took profit again on the 15th. All right, so this was a beautiful trend trade coming out of that volatility squeeze pattern. And this was a cycle low reversal as well. So here was the trade going into this trade on the 12th. It was trading at 108.65. We did the adjustment. Now we're long the 22 March 106, short the 15 110. And then we took some profit on the 13th, this trade right there. And we were up 185 per spread, but then we did one more adjustment. We were trading this to the trend to the upside. So this, you'll learn this in the, at Power Cycle Trading, or, in the trade room, we go through these examples or trades. And then we finally took the last part of the profit here on the 15th. It was trading at 111.92. And this was we had adjusted it, and now our spread cost was $1.51, and it blew out to 485. So we're at $334 per spread, or 324. So that was a volatility squeeze breakout over the 200. Here's just another example. This is another type of trade. This might be this what we call the long condor. So this was a long call condor on Microsoft. And again, here's your volatility squeeze. Look at this squeeze. This one we've been watching for like a month on Microsoft. Look how tight that was. Okay, so we had this on the watch list, but this is where the indicators are so helpful, because if you were just no tools like this and you're just going sideways, you might be taking shots up or down for a breakout up or down, but you're getting whiplash back and forth. But look, the whole time this is in a squeeze, you've got momentum is negative here, okay? Negative here. Now with Microsoft, it's just holding that 21 period moving average. So I was really looking, for an upside breakout. The general trend, overall trends have been up. So been looking for this one for a break to the upside. So finally, we started getting the signal. So here's a reversal right there. Then we had cycle 1 go positive, 2 go positive. We had the moving average cross right there, everything lining up. So here was the entry. Should have gotten in right here. The perfect entry was right here, but went ahead and got in right there, and then had this nice pop to the upside. And we played this with a really low risk trade because we got in a little bit late, and so wanted to keep our risk super low. So we did this as what we call a long call condor. And so basically this was buying the 387.5 call, sold the 390 call debit spread against debit spread, and then we had a credit spread added 397.5 400. So $250 wide spread. Our cost on the trade was 89 cents or 89 bucks. Potential was, if it goes out between our spread right in here, we'd make $161, 180% return. But the big thing is low risk. And this is the other thing that we're always looking for is positive theta. So this type of spread gives us positive theta. So it went out right here, went ahead and took profit. So at that point it was went from 89 bucks. Now it's trading at 229. So $140 per spread, 157% return. So those are just kind of some examples, but these are all trades based on the indicators and the chart patterns that I described to you. And if you'd like to learn more on then how to capitalize on this kind of directional process, here's a little bit more on what we're going to be doing. So again, starting next weekend, Saturday the 8th, start at 11 a.m. Eastern to 2, or however long it takes that day. And then we'll follow up and finish on Monday the 10th from 4 to 5 p.m. Eastern. And then we'll do a follow-up Q&A the next day. So you'll have plenty of time to come in and ask questions on any of this. Okay, so there'll be a 4+ hour market cycle trading course with all the trading tools that I have. We'll go through the tools, how to set those up and how to use them, the different chart patterns, the moving averages. So this is really a really in-depth course on trading direction and timing. So again, use that link there. Let me get you that link one more time so everybody can have a chance to sign up and get the discounts. So the easiest way is just use this right here, and I'll give you the other direct links too, but put that in there. And if you want, then follow along, click on that, pull this up, and then follow along when I'm going through all the bonuses, okay? So if you can, just pull that up, and then I'll go through the full package, everything you'll get, etc. And then if you're interested and want to buy, then click on that and use that discount code DIR 15 small cap, okay? So here's course package 1. Now again, with this, you're going to get a choice. This will be the cheapest course package price. So the price is $197. Now with $197, you're going to get a choice, and you don't have, you can, take your time. You can actually, take all week or whatever you want, but you'll have a choice of any of my indicators except for this Power Cycle core model trading indicator. Okay, so you'll get my extreme range band, you'll get my multi-squeeze time frame indicator, my volatility scanner, cycle reversal, extreme range band, high-low breakout, signal trigger, etc. I'll go through these a little bit more detail here in a minute. So you get one choice of any of those. This package then comes with my Fibonacci price target mapping course. These are all the prices on my website. Then you'll get that moving average cross indicator. You'll get a 30-day trial membership to the trading club, and hopefully you'll stay with us. And it's $97 a month, or we have other different course packages. Packages as far as the trading club. We'll do the follow-up Q&A, and then I'm going to give you my futures trading tutorial. So for trading futures, etc., with these indicators. So all of that, and full bonus package value over $1,100, everything together over $2,700. So big discount, and then use that DIR 15, and this will be $167 for you today. Okay, so that's with the choice of one. Now, if you want all the indicators, which I highly recommend if you don't, now a lot of you already have maybe some of them, so that's why I did this package. So, maybe you have the reversal indicator, or maybe you have the extreme range band, but you want one of the others, so then this gives you that choice. Now, if you want all the indicators, which is I would recommend, here's the one indicator that in package one you don't get. So this is the core model. So this has everything. This has the all the volatility scanner, the support resistance, it has everything. So, but with this package here, you get all 8 indicators, all the bonuses. So this is 397. And if you use the special link, the DIR 15, then you'll get 15% off, and this is 337, and there's also a 2-pay if you want the 2-pay. Okay, so use that DIR 15. Sorry about the scribble. All right, so you get everything I've got on that one. All right, and so or you know, here are the specific links: powercycletrading.com to direct. I'll give you that too, so you can do this link or just use that special that I have and just click on that, you know, specific area. But if you want to go direct here, here's the other link that you can use. So this just pulls up that payment link, which is also on that PowerCycle Trading / okay, here's package one. If you want that, that's powercycletrading.com / to direct. And if you want everything, it's powercycletrading.com / DIR1. But anyway, the easier way to do it, so you know I don't have to keep going back through here, is just go to that special link that I gave you, and it has everything there. Okay, so that's that. And now with the alert service, if you've been looking for more help and guidance, then this is the package for you. So this will include all 5 of my alerts for the next 4 months, and then 4 months of the trading club. Now you can start and stop the alert service anytime you want. So if you're, you know, off on a vacation or business trip or whatever, you can start and stop so you're not using up your time. And then you're going to get 4 months of the trading club as well, which starts and stops, you know, when you want it. So you're going to get, you know, alerts that I send out would be either breakout, reversal, trade setups. These are typically would be a credit spread. We do a lot of butterflies and long condors. We do a whole lot of counter diagonals, monthly butterfly and calendar option pinnings. That was the Tesla, and then selective earnings trades. So 5 different types of alerts that you may receive. Yeah, the multi-time frame squeeze alert indicator does. Let's see, I'm pretty sure we have it with TradeStation. We'll double check when I get to the indicators. So here are the different packages you have. And again, the easy thing, if you want to follow along with me while I'm going through this, just use that code or the link that I gave you right here. I'll give it to you one more time right there. All right, so we've got package 3. Then all this is that choice of one indicator. No, package 3 is all 8 indicators, all bonuses. So you get everything and all the alerts for the next 4 months, $797, and then you get put in the DIR, and you'll get this a discount off of that. So this will be $677. And then if you want package 4, this is your choice of one indicator. It's $597, and you get the discount off of that, the $507. Okay, so access to all 5 trade setup alerts for 4 months. Typically 8 to 12 stocks or ETFs per month. Selective calendars, diagonals, butterflies, condors. So just a really a bunch. Just these come out to you depending on what the market's doing is how I select the option trade. And a lot of the members just do their own thing. They just want the trades, right? So they may just do a different thing, but I always give you the option trade if you want to take it. So then you get the trading guide for each trade alert, do a setup video that night on the alert, why I did it, etc. The trades are listed and archived, so you can go back and look at them. Then you'll have access for the next 4 months to our weekly Q&As. And I do a video newsletter every day after the close. You'll have access to that for the next 4 months. And then, you know, access to the virtual trading room. So this is a really big bonus and help to you if you want to come into the trading room every day from 8:30 Central to 9:30. Ask any problems you might have on a trade or any questions you have on a trade, or see what we're doing. So it's a really good access for that. And then plus you're going to get everything on my website. You'll get anything else you want, any of my other courses, 60% discount. Okay, so that's what you're going to get there. All right, so it showed you that. And here's the summary there. So showed you that earlier. Now here's what we're going to cover in the course. So we're going to start with part 1. We're going to go through the 5-step directional trading profits formula. So this is a black and white specific formula, for using these trading indicators. So we're going to dive into, using the directional trading model. That's going to be the 5 study set model. That's the core model, how it works. And then how to use the momentum flow indicators for your price direction, trend strength validation, how that works. How to use and also align the cycle reversal indicator, the extreme range band indicator with momentum. So all these things kind of are glued together, they align together to make the system, right? So the course is just designed to just take you step by step by step through how to set up all the indicators and then how to use them. And then how to use the moving average cross indicators, the Fibonacci ratio indicator that I use. That'll be part of the course that you'll get. How to use the multi-time frame volatility squeeze momentum indicator, which is a really helpful tool. I'll show you what that looks like real quick here. This is one I use a lot because it's so quick. We can identify, all the different time frames of momentum and if they're in a squeeze. So for example, and towards the end here, I'll do a quick scan. We can look at a few possible trades that are setting up too, if you'd like. So just for example here, this indicator down here, let me put this on. So whatever I put in here, so this is down here, this row down here, if you can see here, let me lay it out. In the course, I'll go through this in more detail. This top row shows you every time frame that's in a squeeze. So I'm going to put this on Exxon. I actually wanted to look at Exxon. It was starting to look pretty decent last week. All right, see Exxon. It's got this 5-minute squeeze that just triggers. See, it's purple. Let me put it on 4-hour. All right, so you can see here so what I like about this multi-squeeze indicator down here shows you every time frame that's in a squeeze, and the row below it shows you the momentum. So if it's negative, the momentum would be painted red on that time frame. So you can see the 10-minute time frame is red, the 15 minutes red, and then here is the 4-hour. Right here, it's green, right there. All right, so there's a volatility squeeze on the 2-day. All right, so here's the daily. You can see this is starting to get a cycle reversal and momentum. So this one might start developing into something next week. And then you can see here, it shows you right there where my pointer is, 2D. That means 2-day. And that top row is in red. So if I put this on 2-day, you'll see that there's a volatility squeeze starting to form. So here it is. See the dots? So this has been 2, 4, 6, 8, 10, 12. This has been going on for almost 2 weeks. So you can see it's starting to consolidate. And these are the kind of patterns that I like to look for, for these types of trade setups. So you can see here we're above all the key moving averages. That's the 200. And you can see it's starting to make that consolidation. So this one might be starting to set up. Here's your cycle reversal on a 2-day. All right, so that's a really cool tool. You'll get that. We'll go through how to use that. Then we'll go through the moving average cross, how to use that one, set that up. Setting price targets, we'll go through the Fibonacci price target mapping. So this is a 3-hour course, but we're gonna, for every trade setup, I always do this target analysis. So we'll go through that. I'll show you in the course how that's done real quick. We'll go through that. We'll go through the moving averages I use and how I use those for tracking trend and for trend breaks. What are the best time frames for your short duration swing trades? We'll go through all that. And then we'll go through all the various 5 high winning probability chart patterns with that volatility squeeze. So step-by-step process for using the volatility squeeze, the opening range breakout for setting these trades up for breakouts. And then the course takes you through a very specific 5 steps rules that I use for doing any of these trades. So this is using the core model, the reversal indicator, and the multi-time frame momentum indicator. So it's five specific steps: 1, 2, 3, 4, 5. Take the trade. So you have to go through 5 steps. So very cut and dry, clear, black and white trade rules. Okay, then how to use your moving averages for breakout tracking your trend, which I'll refer to as my automated trend lines. Again, best time frames, 5 chart patterns, trade entry rules, profit take, exit rules, risk management. Then part 2, we'll go through these trade setup patterns. So we'll go through a lot of the examples of this 5 steps for setting the trigger to trade it. So we're going to go through in more detail. Again, that volatility squeeze breakout, cycle low reversal, cycle high, cycle low retracement. All right, so all this stuff we're going to cover in great detail. And then we're going to go through how to set up the scanner and how to set up your watch list, so how you can uncover then the next big winners using the scanning tool and starting to establish your watch list for potential breakout and reversals. Okay, so we're going to go through that, and then you'll get a nice resource trading library of trades you can go back and look at. So to me, when I go back and look at old trades, it really helps to kind of clarify what went right on a trade or what went wrong. And just a little feedback here is one of my members, Pam, said, I literally lost thousands of dollars on other systems, but I settled on Larry's. His technical knowledge is unsurpassed, in my opinion, and his knowledge for using strategies of low risk and high reward are the best I've found since I started trading in 2003. And then here's from Bruce, that Larry's expertise in custom tools provide one of the best, if not the best method for identifying and entering managing trades. And the follow-up Q&As and trading room reviews using these methods on current identified trades cement the understanding and the confidence in using the cycle model. And then here's from Ronald, biggest improvement to my trading has been additional cycle PCQ momentum indicators 1 and 2. All right, so here's kind of an overview here of the indicators that you're going to get. All right, so if you do package 1, you get a choice of one of these. Now, the first one is the core model indicator. So this one would be only if you do course package. This should be course package 2 and 3. Okay, I'll have to change that. Anyway, so if you do course package 2, this will give you all the indicators. And so this is a 5 study set trading model. So it's got the volatility squeeze, that'll be in it. It's got the support resistance package. It's got the moving averages. It's got the momentum cycle 1 and 2. Here's another 3 is another momentum indicator. Now this one is available for Thinkorswim, TradeStation, Ninja, TradingView, NinjaTrader 7 and 8, and eSignal. Okay, so you can have one or all of those. And then here's the second indicator. Now this will be one that you have a choice of. So this is the momentum flow signal trigger. So this is all, what this is just gives you the arrow. When we get cycle 1 going, negative, or 2 going negative, the arrow will pop up, and you can color code these whatever color, but you can see I've got these color coded. So cycle 1 I have basically in yellow, for downside 2 is in red. I've got cycle 1 in green and yellow to the upside. Okay, so these are just the momentum indicators. So I've only got these available for Thinkorswim. So all these tools were, I first had programmed for Thinkorswim, and then a lot of them I've got programmed for TradeStation, was the next kind of most common platform. And then, yeah, so the multi-time frame squeeze indicator, somebody asked if I have it for TradeStation. Yes, we do. So this is the one I showed you just a few minutes ago. This one will show you the every momentum time frame and everything in a squeeze. And so I'll show you in the course how to set it up. You can see this is on the top of the chart. I like mine down on the bottom, but you can do it however it looks best visually to you. So this will show you everything, every time frame that's in a squeeze from 2 minutes all the way up to weekly, and then also every time frame, the momentum of that time frame. So it's a really quick way to analyze a specific stock. So we'll go through a few more examples here in a minute. Indicator 4, this is a choice that you would get if you had the choice of 1, or you get this as a course package 2 and 3 with all the indicators. So this is my cycle reversal indicator. This has an upper and lower study. So the upper study shows you the cycle reversal arrow. The lower study is actually the tool that actually gives you the signal. And then it also gives you overbought, oversold conditions. I'll show you how to set this up. This is such a great indicator. Use this every day, all day long for everything. Thinkorswim, TradeStation, TradingView are the platforms that this is available for you. And then 5 is my extreme range band. So this is where when the markets start getting stretched to the upside or downside, this is such a great tool for navigating overbought, oversold, overstretched markets, and then looking for that either the buying exhaustion or selling exhaustion that can lead to a price reversals back to the mean. So an alert signal for buying or selling exhaustion. It's the first signal that a security is starting to reverse. Very accurate in signaling in advance potential swing trades, long-term market reversals. So you'll get that tool, and that's a choice of 1 if you do package 1. So Thinkorswim, TradeStation, eSignal, NinjaTrader for that. And then here's another really cool indicator. Now this one is a tool that I started using back at Transworld. This is one of the first little indicator tools that we ever used. This was back like in 1990. We started using this open range high-low breakout indicator for trading crude oil at the opening of every trading day. So it gives you the opening range, high-low, and then when it breaks the low range, we would go short. If it breaks the high range, we go long. But this is a great tool for anything. So this will be one of the tools you'll get as well. So Thinkorswim, TradeStation, eSignal, NinjaTrader. And then 7, the scanner, okay? So this is gonna be a really great tool. So you can have this choice, or if you do the package with all the indicators, you'll get the scanner. So it's really, my favorite is on Thinkorswim, but I have it for TradeStation, eSignal. And so that's kind of a review of overview of the indicators that you will get. And again, take your time. If you're trying to select one, take your time, ask questions, whatever, come to the trade room and see which one you want. So here are the enrollment bonuses. So you're going to get my Fibonacci price target mapping course. So this is a 3-hour plus course that takes you through what I call price target mapping. So it's a combination of using Fibonacci, trend line analysis, price action, support resistance, standard deviation, forecasting, and unusual option activity. So it's a really great way to put together profit targets and defense targets, okay? So we're in the course, I use this in the course because every trade we ever take, even in the trade room, I always go through this analysis before we ever set the trade up. So if you come to the trade room, you'll see this going on all day, as far as this. And then you're going to get my moving average cross indicator. This is based on a Fibonacci ratio cross indicator, really cool indicator. And so you can see here, for example, here's ExxonMobil. This was the indicator right there. You see that orange arrow popping up. That's kind of the indicator there that you'll get. And we'll go through here how to use that. So it's my moving average Fibonacci ratio cross indicator. So you'll get that. You'll get my Power Cycle Trading Club membership, 30-day trial membership, or if you do the alert service, you'll get this for 4 months. And again, you can start this whenever you want. You don't have to start it right away. You can wait till after the course if you want. But this is access to my trading room as part of it. So from 9:30 to 10:30 Eastern every day, Monday through Friday. Do a daily video newsletter update every day. Member trading video archived. We do a weekly Q&A every week, live and recorded. Then you'll get additional good trading educational stuff in my educational vault, all members, and 60% discounts on all courses and software that I offer on my website. So if you went to the website, let me just, for example, went to PowerCycle Trading, excuse me, I'll just show you. So go to the website, excuse me, and anything on my site, you put in your members discount code, you'll get 60% off. So once you sign up, you'll get the discount code. You can see my trading software. Well, you'll be getting, you know, if you do course package 2 or 3, you get all the indicators, everything, okay? So you can see more details about that. But if you also want any of my courses, which are mostly option-based, just go to courses, trading courses here. I've got other boot camps, and all of these courses are available to you at a 60% discount off the price. So here's my selling options course. We just did this in April. So if you want to buy this one as a member, you can get it at a 60% discount. So $397, come in here, you put your members code right here, and you'll get a 60% discount off of that course price. So anything on the website, that's how that works. And just wanted to point that out. So a lot of good benefits there. And then we do, this is another thing I'd like to point out. This Jay, one of my old members, if he's here, he said, reading books is fine, but seeing the actual option trade setups makes a huge difference. So, you know, everything we do is pretty much going to be based on options with direction and timing, and then options to implement the trade. And then you'll get the follow-up Q&A. We'll do that the next day. This will be live and then recorded, so you can have access to that for as long as you want. And then I'm going to give you my 31-page futures trading tutorial guide. So all about futures. This will really help you, understand futures more and use futures if you want to with your trades. And then the Elite Open to Close alert service, kind of already showed you some of that, but we'll go through a few of those, and I thought we could scan for a few trades if everybody wants to do that. So here's one of my members, Dan. He said, you're very diligent and totally thorough with your analysis. That is the foundation of the success of your alerts. I paid for my subscription with the first 4 trades I took with you when I was just learning how to trade options. Please feel free to share this with other participants. So, you know, a lot of the members will, use the alerts, do it the way they want, but some are, actually doing the option trades and they're learning as they go. So it'll be the best investment that you will ever make. Go with the Elite package, great group of traders to Scott. All right, so with this, you get just one more review. You get either package 3 has all the alerts, okay? And this includes all 8 of the indicators, all bonuses, $797. Use that DIR 15, you're gonna get a 50% discount off that. Or if you want package 2, because maybe you already have all the indicators, but you'll get a choice of 1 indicator, all the bonuses, $597 with all the alerts. So all the different 5 alerts that I would send out, trading guide for the alerts, set up video review, all that stuff. You get the Q&A recorded, weekly trading Q&As every week for the next 4 months, video newsletter next 4 months, coaching room next 4 months, and discounts for the next 4 months. So really great benefits there. Anyway, when I do send out a trade, again, a lot of members just do their own thing, but we'll always give you a suggested option trade. And it's based on, what I'm seeing as far as the market environment. So, for example, it might be a breakout trade. So we may want to go with a condor, or it may be a penny trade. So we may want to do a butterfly. So I'll give you that suggested option trade, the entry level that to put the trade on, profit targets that are going to be based on unusual option activity or price target mapping, what option series to use, stop loss levels and guidelines, adjustments. I'm constantly sending out updates and adjustments on these trades if need to be. And these trades are listed and are archived. And then I do, like I said, a setup video review of the trade, after the close, do a daily newsletter, video newsletter. And then the trading room, open from 9:30 to 10:30 Eastern, and discounts. So the alert service run at 79% win rate. Now here are a couple other ones that we just did. These are a few that we just did last week. These are the counter diagonal trade alerts. And here is the kind of rundown summary of the calendar service. Started this back in June of 2019. And through yesterday, we've had these are probably the most, actually, yeah, the most alerts that we send out are typically calendar diagonals and calendars. They just offer you a lot of flexibility, but we've had 282 trades closed, 206 winners, 14 break even, 62 losers, 78% win rate, unaudited, but that's kind of the summary, win-loss summary. And here's one that we did just on Thursday, the 30th. This was on Nike. This was a cycle low reversal. Okay, so this was the cycle low reversal pattern. Let me just show you. So here it was coming down. I'll pull it up actually on the chart to give you a little bit better feel for the trade. This one turned out pretty good. We've been watching Nike then for about a couple weeks. And so just sitting there like a tiger in the weeds, just waiting to pounce. So no hurry, just letting the trade, I say, let the trade come to you. All right, so don't chase the trade, just let it come to you. So here's the trade setup. Here's where we actually got in. Okay, we've been watching Nike here for a couple of weeks. So Nike sold off hard, and these are the kind of patterns I start liking to look for. So you can see Nike here, came down here below all the moving averages, so cycle low, and then you can see we had a cycle reversal here. Cycle one goes positive, but two still negative. So it's just still chopping. See that? And then we start getting still chopping around. So I'm looking for this. What I like to do is to find the highs and the lows. And I'm not going to jump into the trade typically until I start breaking and we get a trick, what I call a price trigger of prior highs or prior lows. All right, so then you can see the indicators, those starting to see, here we go. So here's cycle one and two going positive. Here's the moving average cross that I like. Look at that, we're in a volatility squeeze. So we set this up right there, exactly on that date. That was on the 30th. Set this up right here. Oh, that's 2 day. That's why, I was kind of looking at that. We put on the daily. So here it was. We set this up right there. Look at that. Everything was aligned. We had the moving average cross. We had momentum cycle 1 and 2. Boom. We got in right here on that break right there, that 92.90. Okay, here it is on the 4 hour. This is the other alignment. Got in perfect right there. And then we actually had a profit. We took a little profit yesterday on that breakout. Now this has potential, I think, to get to 96 right here. That's the 236. It could potentially get all the way up here towards 100, but it has a lot of overhead resistance there. So we're just into this to get in and out. But we took some partial profit yesterday, but towards the end of the day, it was trading at 95. Got in on Thursday at 92.90. It was breaking out. Yesterday it was up to 95. We had a high up to 95.10 or so. It had a high of 95.07. So here was the daily, and here was the trade setup. So we did this calendar diagonal, which is a one that we do a lot of these because it gives us the flexibility to hold the trade longer. So we set this up. We went out and bought the 14 June 93 calls, sold the 7 June. That's next Friday's expiration 96. We have a 93 long, 96 short on a calendar diagonal, and we got that nice spike up on Friday. So took a little profit right there when it's traded at 95. So this was up about $80 per spread or 59% return, over that short period of time. So then we can, start scaling out, but I'll send out, alerts and adjustments and things like that. So use what we call a service called Telegram. I'll show you real quick what that looks like. And here was the what it looked like Friday. You can see here it was Nike long trading at around 94.37. If long the 14 June 93 call, short the 7 June 96. and long multiple contracts, take some profit on the run up and hold balance long, currently up about 60 per spread or 44%. Okay, so that's kind of what they'll look like. So I'm constantly updating if things need to be updated. This goes out just instantaneously. And the indicators are available for wealth charts as well, but that's a separate deal. I can't give you discounts on wealth chart because this is kind of a partnership deal. So I don't control wealth charts, but my indicators are available for wealth charts. So they're a really good platform too. All right, so here's another one. Here's Oracle that we did this one back on the 16th. And again, here's just the trade setup. Again, we were looking at Oracle. Here was your the breakout right there. You can see our momentum. It was breaking that 50. So this was kind of a cycle low retracement reversal coming in, and we were targeting just kind of a quick move up. And so we did this trade was new Oracle long. This had a cycle low retracement reversal, positive momentum, okay? Cycle low reversal right there, positive momentum, and then got in on the 16th and taking profits on the 22nd, May 22nd, just kind of quick review of this one. So got in on the 16th. And so these are, just alert trades just to show you what they look like. It was trading at 121.83. So the 31 May 122 long, short the 24 May 125, calendar diagonal, and got in at 147. Popped up on the 22nd. It was now trading at 125.16. So got some profits right there. Went from 147 to 250, up 103. $70. So these things will vary from profit, but they're all based on options. So you're always going to get a pretty decent return. So here's just a couple of examples of the butterfly long condors. So started this one back in 2019, and through yesterday we've had 166 closed out, 117 winners, 11 break even, 38 losers, 77% winners. Now these can give you these huge potential returns like I showed you on Tesla. You can get 25 to 1 sometimes. So these are really high reward, low risk trades. Typical risk maybe 50, 75 bucks, on the average. So very low risk trade. Here's one that we just did last week on Coin, the ETF here. So we entered on this one, the 24th, it was trading at 235.80, went long the 31 May long call Condor. Okay, so this was a really tight, low risk trade. And then we did one adjustment. So we had originally long the 235.37.5, and then it sold the 260.62.5. And then when it was coming off a little bit, covered that back for a small profit and then adjusted it. And now we were short the 255.57.5. Okay. So here's the original trade setup there. It says new coin long, daily volatility squeeze with positive momentum, target 1 250, target 2 260, and buy a condor. So buy the 235.37.5, 260, 62.5 at 80 bucks. And then we did an adjustment on the 29th and out on the 30th. And so I'm updating you constantly if anything needs to be done, so you don't have to stare at your screen all day. And so here's the trade setup, had a volatility squeeze, cycle 1 and 2 momentum. So jumped in right here. I thought this was going to do a lot better, but we had that, it was really whippy, and we had that one spike there. So we went ahead and just took a big profit there and left a break-even stop in on the balance. So here was the trade setup. You can see the adjusted trade was, into the 255, 57.5 call. So this is what it kind of basically looks like right there, is what we call a long call condor. And so we adjusted the price down to $63 on a debit cost, which if we'd gone out between here, which was, I thought had a high probability, this would have made $187 per spread or 296% return. So always looking at the risk first, and then, keeping tabs on it, and, sending out any alerts that need to be done. So it took the profit here on the 22nd. It was trading at this point 243.77. So it was trading right there, right in the middle where we wanted it. But for the max profit, we needed this to be right there yesterday. So, but at that time, went from 63 to 168, so it's up 105 or 166% return. So that's pretty much kind of an idea of what you can, look at having. And here's one more, just a broken wing long call condor on Microsoft. I'll just kind of flip through this. And again, we had a volatility squeeze right here, and we had a breakout the 4-hour with the daily. And we did this with a long call condor, what's called a broken wing condor. So risk, we had $47 spread risk here, potential to make 203 per spread, our 431% return. And it went out right where we wanted it to. So that was a pretty good trade. So it went out right there at expiration, right between our spreads right there. So it went from 47 to 250. So this was up max profit 203, 431% return. All right, so that's everything. I thought what we'd do real quick is see if there's anything setting up, if you'd like, for a breakout. There's not a whole lot. Let me pull up the charts and I'll show you kind of how I look at things real quick. And yeah, here's the special link again. Please, Charlie, use this link here. Okay. And then let me pull up, I'll show you how I kind of set up. If you come to the trading room, you'll see this setup. This is what I use every day. And this is what you'll learn in the course, and you'll get all the tools and indicators here to do it yourself. And if you look at the price of my indicators, they're cheap. I mean, compared to other tools, I don't go around looking that much at what other people offer, but I developed this system back in 2009. It's pretty much, with a few little additional visual tweaks, it's pretty much exactly the same. So here's just here's my kind of watch list. I just have everything that I kind of watch back and forth over the, course of the past year or whatever. I've got it loaded in here, and then I've got my scanner code coded in here. So you can see it here. Then I've got daily squeeze, what's triggered, 4-hour squeeze, etc., weekly squeeze. So if I click on here, it'll pull up everything in a daily squeeze based on the code. So you can see LNG, Nike, Dollar General, Tesla, heating oil, crude oil. Okay, so then I like the combination I really like a lot will be the 4-hour, 1 hour. So here's LNG. It's been in the squeeze, going nowhere. So here's been a squeeze for 27 days. Here's Nike. This is the one we just took. Took this one. See that? Perfect. Here's Dollar General. So this one broke to the downside, but the earnings wouldn't have taken that one. Here's Tesla. Tesla's one we're watching. This one is in a nice squeeze. See this pennant formation? Nice squeeze on Tesla. Just this is on our watch list. Crude oil. Crude oil's in a squeeze, going nowhere yet, but consolidating. If I can get this over here. Looks like it's, right now, poised for a downside break. We've got OPEC meeting this weekend. Here's heating oil. SWKS, nothing there really. Here's this one looks kind of interesting. Here's EWJ. I put this on the watch list, potential buy setup here. So EWJ is the Japanese ETF. So you can see it's starting to develop a daily squeeze. And it's showing a cycle reversal here. Momentum cycle 1 and 2 going positive with the moving average cross. So this one has potential. Gonna watch that one. AIG kind of cycling, reversing off that 50 period moving average and a squeeze. Nothing to jump on right yet. Here's one that kind of looks interesting. ON, it's an AI stock. Gonna watch that ON. So then you just kind of make that list. Here's Meta. Meta starting to consolidate. So those are just a few, nothing really jumping out. Here's a few, wow, there's a lot of weekly squeezes going on. Look at this. So I'll flip through a few of those real quick. So these are the things I'm constantly monitoring. Here's the weekly, and I'll put this, I'll leave that there. So here are a few weekly squeezes going on. Here's Hershey. Now these are some big ones, maybe setting up Hershey. PayPal. T-Mobile looks good. Look at this one. T-Mobile. I'm going to put up big stars by that one. Look at that. Wish I'd been watching that one earlier. Look at that. Perfect right there. Okay, any questions or anything? If not, I think we'll probably call her a day. Here's Wayfair, Honeywell, XLY. You can see everything. There's so many weekly squeezes, so everything's really stuck. Look at this T-Mobile. That's one we were looking at Friday. Missed it. Look at that. Oh man. Yeah, we actually looked at this one Thursday or Friday in the trading room. Took the eye off the ball though. That was a beautiful one. That was so perfect. Look at that. Darn. Guys, see this? $4-hour and a daily. This was so perfect. See the cycle reversal right here, and then cycle 1 and 2 go positive. Then here's your here would be the trigger right there, about 165. Look at that. Anyway, there are so many of them. Anyway, those are a few, and I hope this was helpful to you. And I'm really excited and looking forward to next weekend.